What's up, world, and welcome back to another episode of How I Trade, where I briefly review the price action of the day in the S&P 500 and NASDAQ futures and ask myself the question, if I were to take one trade per day or one trade per session, the AM and the PM session of New York, what would that trade be? I think all of us traders can at times have the bad habit of overtrading. So by looking at where, when, and how the main moves of the day happened, and how my model did or did not print prior to that move, we can gain experience over time that our model will deliver and forge the patience to wait for that A plus setup to come. So that's what we're doing here, and starting with ES today and looking at the higher time frame, we did have a bearish day. Price did come down, tap this previous day low from Wednesday, which we can more clearly see nicely on the 1 hour here, where we had our low here. Price came right down. We also have this little fair value gap right there where price came and tapped exactly the top of it, took the previous day low, and then began to pull up. But how could we have gotten into this move here? The AM, this is our midnight here. The AM session starts 9, so this energetic move here. Well, already on the 1 hour, we can see that we had this inefficiency, this fair value gap here. Price had at 9 o'clock, came up, took these highs, broke down and displaced low, leaving this inefficiency, where we then created a fair value gap when price came back up and closed here. And in the 11 o'clock hour came up, tapped the 50% of that fair value gap and broke lower. Now, as an intraday trader, I personally don't really trade on the 1 hour, but I keep an eye on all time frames at all times to see what are different levels of liquidity, where major swing highs and lows, previous days highs and lows, where all that resides, because that's what I use for my targeting. So dropping down into lower time frames, I've got my 1, my 5, and my 15-minute here. For the open, we had this consolidation. We left some relative equal highs. And at the 9:30 open here, we had what we call a Judas swing, a fake move before the real move happened. So we have accumulation, manipulation, and distribution. It's the ICT power of 3. Accumulating buy orders and sell orders, manipulating where prices rallied up, taking these buy stops, inducing traders in to be going long off the open here because you see this energetic move up. And then we have our breakdown. So price overall, from taking that high down to these lows, moved about 40 handles, which is really good for S&P. But again, how could I have gotten into this? Well, I generally try not to trade until about 9:50, so we could see what the opening manipulation might be, and then figure out how to get into that trade later. Now we did have here, we have our 9:30 fair value gap where price did break down below, tapped in, became an inversion fair value gap and came lower, but that was a 9:37. That's not a time when I want to take a trade. So what would be the cleanest and easiest move here? Well, to me, I'm going to draw it out from a blank chart here. So on the 15-minute time frame is where I like to start, and then going down to the 5. And one of the main models that I trade is the ICT 2022 mentorship model. And the key steps in the 2022 mentorship model are having some amount of accumulation, or more importantly, a stop rate of some sort. So like we were saying, we have our accumulation here. We have a stop run there. We have a displacement down over a low. And then we lift a fair value gap behind here, where we retrace up into it and then move away towards sell side. So adding the lipstick onto the chart here. We had our London high here. We didn't come all the way up to that, so sometimes London will set in the high or the low of the day, which it did. It set in the high here. We accumulate around that midnight open price, generate some relative equal highs. We stab up, create this big wick and displacement and displace down. So at this point already, I should be looking for a sell side delivery. And with a bearish viewpoint, I could be very patient, wait and expect for price to retrace back into this fair value gap, because now what we also have here is not only do we have the fair value gap in this 2022 model, but we also have the breaker. We have our high, our high, low, higher high, lower low. We trace back into the breaker and send down. On the 5-minute, we actually did have a short-term entry where if you were just trying to scalp a little bit more, you could have gotten in off of this 5-minute fair value gap, tapping the breaker here, closing beneath, showing bearishness. Wicks do the damage, bodies tell the story. Price didn't even bother to close inside of this fair value gap. It simply wicked in, came down, closed bearish. If you were to tag in, as I missed this move, but my friend that I trade with did catch it, and that was 10 handles right there. He got his, he has a daily goal that he likes to hit. He got his 10 handles, and he was done for the day in 15 minutes. So that could have been an easy, beautiful move too. But the optimal move, if I were to be shooting for such a thing, would have been to be on the slightly higher time frame on that 15-minute right here. But it's super clean. This is a completely reasonable ICT 2022 model that I could have gotten into. Consolidation, accumulation, clear manipulation, just raiding these buy stops here, displacing down, market structure shift over this low, creating a breaker, fair value gap, retrace, OTE at the low of that fair value gap if we do it from the bodies. I personally like to draw my fib from the bodies, playing into the whole bodies tell the story, wicks do the damage, but you can still check both, but I found the most accuracy with using the bodies. I'm just going to take a look here, adding a few more settings on. Where price ended up. Yeah, so we retraced into a short-term premium before inevitably breaking down, and I very often will be using previous days highs, lows, previous weeks highs and lows as are our targets. This sell side target here came from I believe a 4-hour, this 4-hour swing low as one level, and then PDL standing for previous day low, which was a target right there. So if I were to take this on the 15-minute time frame, I would be entering from here with my stop probably just about there, around the range of the breaker. If price were to break through this fair value gap and the breaker, I might be wrong and would not be potentially going this low, and then targeting previous daily low. That's a 3.85R. 26 handles on the S&P is incredibly good. Even if I just went for this target, 20 handles would have been great. Even if I just went down for this to retake this low, took a partial here, TP1, TP2, TP3. That would have been a beautiful trade on the S&P. Quickly switching over to NQ to see the similarities and differences. I think it's important to look at both to see how the price delivers similarly yet differently. I jumped first the weekly chart because I know that today we did take the previous week low, which was an original target for NQ today. Here's our 9 o'clock open. Similarly to ES, we displaced over this low, created a fair value gap, tapped into it. When we created this first initial low here, we came right to it without actually tapping it, pulled up a little bit, went down. The thing about NQ though was that it didn't have quite as much of a retracement, and it was harder to get in. It did take these highs, it left these relative equal highs here, which, you know, you might have thought that price was going to come back for that, but then it came in, took this previous day's low, or sorry, this previous week's low, came up, didn't get into its 15-minute fair value gap, and then continued lower. So it was a little heavier than ES, didn't give quite the same entry. That's why I keep both. I have these setups here where I use the 1, 5, 15, and then the 1 hour, 4 hour, and daily in these little triplet setups to be able to keep an eye on both ES and NQ to see where things are printing a little more cleanly. Like this, it's hard to beat how clean this is coming up to the 50% here on that 15-minute. Super clean. Everything you would want in a trade right there. And I think that'll conclude today's episode of How I Trade. If you have any questions, if I didn't go over anything, if I went over anything too quickly, please leave a comment and let me know. And until next time, be safe.